Hi, James Ransom here. For those of you that are new, I don't do these that often, but I feel like we've kind of hit a couple hiccups in the market. One of the issues being like severely low inventory, record low inventory over the past, since before I got into real estate in 2011. And then also we've had record high interest rates, which should have softened pricing. But I'm going to try to show you with a couple graphs I created by pulling data from January of 2022 up until today, because you can see a lot of correlations with data. And it also kind of helps you get a little bit of a foresight into what's going to happen in the future. Now, I'm not talking like crystal ball shit here, but you can at least know what to expect should the Fed continue to keep tight to their promises and slowly start reducing rates over the next couple meetings, 4 times in 2024, hopefully. So anyway, we have a couple sheets here that I'm going to place a link to. I'll put them on my website so you guys can just go and look if you want. But the first chart I made shows interest rates and median sold prices. So I know it's kind of hard to tell from back there. Again, I'll you know what, probably just put this right above me in the video. But you can just really easily see that when interest rates go up, home prices go down. And if you go look at the median sold price versus the amount of units sold, you also get those little contrasting bubbles. Like, these are the two main indicators that you should be looking for when trying to figure out what's going on in the market. So inventory is extremely low. And even though interest rates are high, obviously supply and demand is like numero uno that takes precedent over interest rates. Interest rates affect people big time, especially like first-time home buyers, people with not a lot of cash. But the deal is in Huntington Beach is this is not only a primary market, it's also a secondary market where our median price point home is just under $1.3 million. So we're not looking at like your average American buyer. So when you see all these news articles come out in Wall Street Journal and they're like, oh, housing's crazy right now, 400,000, like, not to be a dick, but we all kind of start laughing because that's like, I don't think I've seen a $400,000 condo, even on lease land, in years. So anyway, where I wanted to get with this was there's one other thing I look at, and it's the amount of contracts created for that month. So December was a record low amount of contracts. And this happens because, Christmas, it's like a seasonal thing. But in 2023, just this last December, we had 64 listing contracts created. So I went back and I remember there used to always kind of be around like the 350 to 450 active homes on the market in Huntington Beach. And this was when I was first getting into real estate. 2011 was kind of the bottom. A lot of my first transactions were REOs, short sales. And I've only really seen an increasing market up until in May of 22, June of 22. We started going the other direction for it's kind of shifted here and there. I think in like maybe 2016, 2014, 2013 maybe, if I'm remembering correctly, but they were like very small shifts that didn't really affect much. But we hit a peak in 2022. I want to say it was in April. And then in 2023, we hit a new peak in June at 1.262. And then we got close again in August of this last year at 1.275. I might have these numbers backwards, but again, I'm going to put these charts up. I know the most recent highest peak was just last year, right before the holidays kicked in and things kind of started settling, and that coincidentally happens to be right when rates stayed consistently high, like in the mid-sixes and edging up towards 7. If you go back to August, the year we hit the high, rates went from 6.78 up to 7.23, and then in the few months thereafter, you see the median price of sold homes in Huntington start to drop. And we hit in December of this last year 1.137, which I know is still crazy high, but compared to floating right into that 1.3, it was like a significant drop. I think it had like a lot of realtors that track this kind of stuff going, uh-oh, is this that correction everyone was talking about? But then, of course, politics and everything else plays into it. And I think going into an election year, we're going to see lower rates than we should. I think we're like in a good place right now. I hate 7% interest rates. I think it stalls the market out, especially when you don't have a lot of inventory and you don't have a lot of good inventory, and there's just not a lot of activity in general. You have people out there that want to buy but are being restricted because of their purchasing power, and you have people that want to sell but they're fearful that the buyers are going to be pulling back because of their restricted purchasing power. So there's going to be two things happening in the next few months. We had 64 contracts taken in December, but just this last month we had 115 new listing contracts taken. Now with the new MLS rules, or since like December of 2020, I think, and I blame Compass for this in a good way, but the whole coming soon thing happens. So now we have like this 3-week window and we can sign a listing contract before they show that they're going to be active on the MLS. So you can almost say a lot of these, I mean, a lot of realtors do go direct to market, but most of the time you're going to see a padding from when they get this signed to when the home actually hits the market. So that's a little like foretelling sign of what's going to be happening within the next 21 days, 3 weeks. So we almost doubled the amount of contracts taken from December to January. So we're going to start seeing those listings trickling on the market. In December and January, we had like crazy low home sales. In December, there was only 88 units total that sold in Huntington Beach, which is nuts. In January, it was even lower, 82, because in December, we only took 64 contracts. And like there's some leftover, obviously, you know, at the median days on market is sitting around like 14, jumped up to 29 days. So you had a lot of pre-existing inventory that was still sitting there. But what's going to happen is we're going to have a slight increase in inventory. Rates are hopefully going to continue to go down. You know, in October of last year, they were, I think, at their highest at 7.63%, and they've almost dropped a full percentage, if not over a little bit. And I know they creeped up a tiny bit today. But disregarding that, the trend is going to be that they're going to continue to drop down towards, I would say, that 5.5 range, which for me feels comfortable for a lot of people. 5s are okay. I think like a lot of psychology plays into this too. 6 is scary, 7's like hell no. And if you got to experience home buying during the 2 and 3 and 4% range, like good for you, but like realistically, markets can't be sustained with that type of like free money essentially. So here's what's happening. My prediction, and also just what the numbers are saying. From March to May, we're going to see 1, hopefully, but probably not, 2 interest rate decreases. We're going to see a slight influx of inventory, and that's also going to be like compacted on with just seasonally what happens. Not a lot of people go on the market in January and February for obvious reasons. Once kind of spring break hits, like mid-April, people start focusing on the fact that they have like 2.5 months left. Kids are out of school. Like there's an influx of families doing it because it's just way more convenient. There's a lot more homes to choose from on the market. So I would start preparing that if you're considering selling your home or you're considering buying, you might want to look at 2 different like strategies here. If you're thinking of selling, start preparing now. Clean up your house, fix it up, get ready, and start looking at March, April, May list dates. And then, of course, as things kind of progress, I'm going to try to keep putting these out like a little bit more consistently so you can stay informed if you like the information I'm providing. If you're a buyer, what I would start considering is looking now. And when we start seeing like during this month, we're going to see an inventory increase. Obviously, like supply and demand. If there's not a lot of houses to choose from, sellers don't have to negotiate because what else are you going to buy? There's like one other home in the track and it's a total dump. Like you're going to have to negotiate with that one seller in the neighborhood that you want to be in. But when 2 or 3 listings pop up in that neighborhood, then you can go back and forth and maybe 2 or 3 of those homes actually fit your needs, and you can negotiate and see which seller is maybe wanting to be open to negotiating. Maybe it's a timing issue. Who knows? But you have more purchasing power in those types of positions. And if I were you and you are a buyer, I would consider purchasing sooner than later. And then obviously what everyone always tells you is like marry the house, date the rate. Commit to a price where you're, first of all, actually going to be able to enter escrow because you're not battling with 3 or 4 other people in that home. And secondly, you can just refinance. Now, yes, you are going to be paying some possible loan origination fees, but we're talking $3,000 to $6,000 versus multiple offers driving home prices up in this price point, 50, 75, 100,000 plus. So if I were you and I were a buyer, I'd go get pre-qualified and I would start looking now and try to enter escrow before everybody else jumps on the bandwagon after the rates have already started lowering, because it's going to happen in the next 2 to 4 months. So yeah, I will put these charts and little graphs up. But if you have any other questions, feel free to DM me, email, text, call, whatever. not to say I don't want your business, but really I'm just here trying to be informative. So I hope you guys got something out of this. I'm going to go home, eat dinner, and go to bed because I'm exhausted. Been up since 4:45, and I will catch you next time. Bye bye.